When it comes to building real wealth, most people are constantly searching for the best strategy, the one move, investment, or decision that will set them apart financially. To get closer to the truth, imagine going directly to the source. Millionaires. People who have already achieved financial success, built substantial net worth, and navigated decades of economic ups and downs. When asked a simple but powerful question, stocks or life insurance, which one actually helped you build wealth? Their answers reveal insights that go far beyond basic financial advice. What they shared wasn't just about numbers. It was about mindset, discipline, strategy, and understanding how money truly works over time. Today, we will talk about I Asked Millionaires, stocks or life insurance. Here's what they said. So, before we start, make sure to hit the like button and subscribe to my channel. One of the most common responses from millionaires was surprisingly consistent. Stocks are the primary engine of wealth. Many of them emphasized that the majority of their net worth came from long-term investments in the stock market. Whether through individual stocks, index funds, or retirement accounts, they highlighted the importance of consistent investing over time. They didn't rely on timing the market or chasing trends. Instead, they focused on discipline, investing regularly, staying patient, and allowing compounding to do its work. Several millionaires pointed out that their biggest financial breakthroughs didn't come from dramatic wins, but from steady contributions over many years. Investing a fixed amount every month, reinvesting dividends, and avoiding emotional decisions during market downturns were recurring themes. They stressed that the stock market rewards consistency far more than brilliance. In fact, many admitted that they made mistakes along the way, but what mattered most was that they stayed invested. However, when the conversation shifted to life insurance, their tone didn't dismiss it. Instead, it changed in purpose. Millionaires rarely described life insurance as a tool that made them rich. Instead, they described it as a tool that protected their wealth. Many of them owned life insurance policies, but not for the reasons most people think. They viewed it as a safety net, a way to ensure their families were financially secure no matter what happened. Interestingly, high net worth individuals often use life insurance in more strategic ways than the average person. Some millionaires mentioned using permanent life insurance policies as part of their estate planning. They explained how these policies can provide tax-free payouts to heirs, helping preserve wealth across generations. Others discussed using the cash value component as a conservative financial asset, something stable that balances the volatility of their investment portfolios. Another key insight that emerged from these conversations was the concept of role separation. Millionaires tend to assign clear roles to each financial tool. Stocks are for growth. Life insurance is for protection and stability. They rarely confuse the two or expect one to do the job of the other. This clarity allows them to build more effective and balanced financial strategies. Some millionaires also shared their experiences with term life insurance, particularly during their earlier years. They emphasized how affordable term insurance allowed them to secure large amounts of coverage while focusing most of their money on investing. As their wealth grew and their financial responsibilities changed, many of them either reduced their reliance on term insurance or transitioned to more permanent solutions for long-term planning. A particularly interesting perspective came from entrepreneurs and business owners. Many of them viewed life insurance as a strategic business tool rather than a personal investment. They used it for purposes such as funding buy-sell agreements, protecting business continuity, or securing loans. In these cases, life insurance wasn't about returns. It was about risk management and ensuring stability in uncertain situations. Another recurring theme was behavior. Millionaires repeatedly stressed that success is less about choosing the perfect financial product and more about maintaining the right habits. They pointed out that many people fail financially not because they chose stocks over life insurance or vice versa, but because they lacked consistency, discipline, and long-term thinking. Emotional decision-making, especially during market volatility, was cited as one of the biggest obstacles to building wealth. Some millionaires also acknowledged the psychological benefits of life insurance. Knowing that their families were protected gave them the confidence to take calculated risks in other areas, such as investing or starting businesses. This sense of security allowed them to focus on growth without constantly worrying about worst-case scenarios. Taxes were another important topic discussed. Wealthy individuals are often highly aware of tax efficiency, and many use life insurance as part of their broader tax strategy. The ability to grow cash value on a tax-deferred basis and access it without immediate tax consequences was seen as a valuable feature. However, they also emphasized that these benefits should not be the sole reason for purchasing a policy. They should complement an already solid financial plan. When asked directly, if you had to choose only one, stocks or life insurance, which would it be? Most millionaires leaned heavily toward stocks. Their reasoning was simple. Stocks create wealth, while life insurance preserves it. Without growth, there is nothing to protect. This distinction highlights a fundamental truth that is often overlooked in financial discussions. However, not all millionaires gave the same answer. A smaller group, particularly those with very conservative financial philosophies, placed greater value on stability and guarantees. They appreciated the predictability of life insurance and the peace of mind it provided. For them, avoiding losses was just as important as achieving gains. One of the most powerful takeaways from these conversations is that wealth building is not about extremes, it's about balance. Millionaires rarely rely on a single strategy. Instead, they build diversified financial systems that include growth assets like stocks, protective tools like insurance, and sometimes alternative investments. This layered approach allows them to adapt to changing circumstances and maintain financial resilience. Another insight that stood out was the importance of time. Nearly every millionaire emphasized that their success was the result of decades of consistent effort. There were no shortcuts, no secret formulas, just disciplined investing, smart decision-making, and patience. Whether it was stocks or life insurance, the key was sticking with the plan long enough for it to work. Here's an additional layer that many people overlook. Millionaires also focus heavily on cash flow. They don't just think about how much money they have. They think about how their money moves. Investments that generate consistent income, whether through dividends, business profits, or other sources, play a major role in their financial stability. In this context, stocks often serve as both growth and income tools, while life insurance acts as a backup system that protects that flow from disruption. They also emphasized adaptability. Financial strategies are not static, they evolve over time. What works in your 20s or 30s may not be the same strategy you rely on in your 50s or 60s. Millionaires continuously adjust their approach based on their stage of life, risk tolerance, and financial goals. This flexibility allows them to stay aligned with changing circumstances rather than being locked into a single rigid plan. If you liked this video and would like to see more like it, please give it the thumbs up. Leave a comment and click the button to subscribe.